Hey everyone, welcome back to Yuri's Box. In this video I'm going to be answering more comments and give a quick look at TLT while we're at it. If you like this kind of content, consider leaving a like and subscribing to the channel. And as usual, nothing in this video is financial advice. So the question really is, what do you do? I mean, do you do regular moves? Do you just sit and wait and just watch time go by and grow old while you're waiting for TLT to break out? So I'll start off by saying this. I'm a very conservative kind of investor. All right? I don't like to take on. Let's maybe put it like this. I accept volatility rather than risk, right? And I think those are two very different things. Sven Carlin actually spoke about this. If you haven't checked out his YouTube channel, definitely do, because he's kind of my vibe, you know. And what do I mean by that? I'm not so concerned with, what price will do. I accept the fact that it might blow up in my face, all right? Actually what we saw right here, a couple of weeks ago. It's looked like we were about, to go up, all right? But then, you had all the basis trade, the, perhaps forced liquidation, the dollar shortage or whatever, whatever. Regardless of what it was, at the end of the day, the moral of the story is that we had a pretty rough sell-off right here. I accept the possibility that whatever I'm speculating on might blow up in my face. What I'm not willing to accept is, let's say I buy a small cap stock, which is thinking about making a product, and, we're still in development and things like that. Thing might completely fail, right? I'm not willing to take that kind of risk on. I'm willing to accept volatility, meaning that I don't know how long it'll take. I know that eventually we'll get there. And mind you, I actually started making videos on February 12th, all right? And that was right here. And if you recall, February 12th, right here, was Wednesday. And Wednesday, February 12th, 2025 is actually when we got inflation. And if you recall, the reason why we had this huge sell-off in bonds was due to the fact that inflation came in hotter than everybody expected. All right. And I actually made my first video, and my first video was called actually the long bond thesis. And I still do believe in the thesis. This move right here still hasn't made me change my mind, and I'll tell you what later on what would make me consider changing, having to go over the thesis. And again, when we were here, my base case was that everybody was probably a little bit too optimistic on growth and maybe a smidge too pessimistic on inflation. And my speculation right here was that eventually, I don't know when, I don't know how, but eventually bonds would have to kind of reflect the fact that we weren't really in a situation where the growth in the US was that strong as people were thinking. And from here until here, it played out very, very well. All right. It is exactly what I was thinking continued to play out, meaning that we continue to get more and more hints that growth was likely less strong than consensus. Now, of course, we had this blow up here, but again, that's just the nature of following the markets. Eventually, something will blow up in your face. All right, but again, to this day, I still don't have enough of a reason to just go back and say, I have to rethink it all. Because just like, we've been reading in the PMI reports, and again, full disclaimer, never go full macro. All right, and this is pushing it. This is definitely pushing it. But again, just as we've been reading, and like the Beige Book, I mean, it continues to paint the same picture that we've been reading ever since February. And what we've been reading since February is more consistent with what we saw last summer, from June to middle of September, when we actually had growth concerns. All right, and it kind of helps to dispel the strength that we saw from September to January, which I've been speculating that probably that was mostly due to transitory events, meaning tariff front running, natural disasters, port strike fears, all that good stuff. All right. Now, why am I saying all of this? Well, not just to I don't want to pat myself on the back just yet. I mean, we did have a pretty rough sell off right here, so again, it's still early for the to call Forbes. But again, I just want to reiterate the fact that the way you sleep well at night, you actually hedge for that before you buy. Meaning, by the time you've bought something, you're already well past the time the time you're supposed to get ready by. All right. Imagine you're not buying a stock or a bond. Imagine you're buying a coat, right? And you're watching, in the looking at the coat through the shop window, and you're just visualizing and you're just saying, "Damn, I'd look so cool in that coat. I'd just be so great, so awesome." Then you buy the coat. You get back home. You open the door. Your wife's there and says, "You look like a total jackass. Why did you buy that coat?" And then you have all of this. You have to process the fact. Oh my God, I didn't think I'd look like a jackass, and so now you're doubting yourself. The doubts should come before. All right. And usually the thing you should doubt the most, and which is honestly, I think, the biggest way, retail investors such as we are make the biggest mistakes, is when we follow consensus. We buy into something because everybody else is talking about it. And again, I think I deeply believe that the biggest enemy that retail investors have to fight isn't technicals, isn't bad luck, it's following consensus. Meaning we buy at the top and we sell at the lows, right? It's buy high and sell low. Why is that? Well, the best example I can give you is 2022, right? And dude, where's my guitar? Probably, this probably won't apply directly to you, because I remember that you said that, with TLT or buy-in price is somewhere about 93 or I don't know, something like that. But it's definitely not at the highs. That's the main thing. But looking at 2022, all right, what went on from October of 2022 till really July of 23? And again, this is looking at the 30-year bond. It was exactly at this point right here when we started to have recessionary fears, all right? And mind you, the Fed was still hiking rates. Bonds continued to sell off until they peaked they bottomed really in October of 2022. After that, we had a significant rally. This was about 25%, no, 20%, 23% rally. All right, 100 basis points rally on the 30-year bond. And it actually stayed close to the local highs until July of 23. Now, why was that? Because it was exactly at this point right here that we had those recessionary fears. I remember clearly, because I was one of the schmucks thinking that we were going to have a recession in May, and probably between May and July of 23. And it is exactly, this time frame right here when we started having those Bloomberg articles where 100% of economists are predicting a recession in 23. So a recession was consensus. And there are two things that you have to really keep in mind when it comes down to consensus. It's usually wrong. And if it's right, it's wrong either way, because it's usually priced in. And the best example I can give you is exactly 2022. Now, again, bonds were at the local highs, and they stayed at the local highs until really July, until they had to play catch up. Stocks, granted, they did have an okay run until October of 23, but until really July, where was that? I mean, we still hadn't made a new all-time high, right? And we were closer, again, even by October 23, closer to the lows, arguably, than the highs at that point. So, again, even if consensus was right and we were going to have a recession, I mean, stocks were still pretty depressed, meaning that was likely priced in. So that is the most important thing I think we have to really battle with. Consensus is usually wrong, and if it's right, it's already priced in, so consensus is wrong either way. Now, how does that apply to TLT? Well, I go back to the long bond thesis. All right, going into the year, what were expectations? Growth was a given, meaning growth in the US was great because, US exceptionalism and all that good stuff. And because of that, we were going to have to worry about inflation more. Because again, from September till, we did have a scare in the summer, but forget about that. September to January, that's rock and roll, man. That's what we like. We like to see the US going on, and we might have to keep rates higher for longer because of all the inflation. So consensus viewed as growth as steady, right? So that's the first thing that is that TLT has going for it, and that's still one of the reasons why I'm still comfortable, holding TLT. Then you have to ask yourself a couple of other questions. Did I buy at the high? Again, did you buy at the high? No. That's the first bit of good news. That's the second bit of good news. Did you chase the dips? Meaning that you bought at the high, then you said, oh man, it's dipping. I'll buy it at 154. Then it dips some more. I'll buy it at 135. Then it dips some more, 113, 107, 89, and so on and so forth. This doesn't really apply to you, as if I remember correctly. So again, that's the third bit of good news. Again, if you're looking for a reason to feel better, I hopefully this video kind of adds some extra context. And again, the time to hedge for feeling like a jackass is before. All right, because when you've bought into whatever it is, bonds, stocks, whatever, it doesn't really matter what asset class we're talking about. By the time you've bought, you should have done your homework. That's really important to keep in mind, because again, consider the coat analogy. All right, when you're looking at something, consider, yes, that you might look like a rock star, but also consider the fact that we might collectively look like a bunch of jackasses before we actually get to look like a rock star. And again, that is the reason why I generally try to think about all of these things. And again, I'm fine with looking like a jackass for quite a long time. All right. Again, I'm perfectly conscious of the fact that we might get these, incredible, smacks in the face. But I know, or at least I think I know, at the very least, that again, probably, given what we see in, all the reports and the business surveys, and also where consensus was at the beginning of the year, meaning that everybody was quite sanguine on growth, which was the exact opposite. If you really want to draw a parallel to 2022, everybody was sure that we were going to have a recession in 22. We didn't have a recession in 22. Everybody was certain that the US was just off to the races for 2025. It's April. It's May. 5 days till May, 6 days till May, whatever. Are we really there? I'd argue that we're not really there. So I'd leave you with that. And as far as the rest of the question is concerned, do you do anything? You see stocks go up and down. What do you do? Do you just stay still and not do anything while you watch everybody trade and have fun and make lots of money? The answer is yes. I'm I'm the most boring kind of investor you could find, possibly, because I really don't do anything except buy and hold. I know that sounds, totally unsexy, and it's a buzzkill, definitely. But again, I'm fine with volatility. I'm fine with the fact that I might look like a jackass. I was bullish bonds right here, and I might have looked like a genius right here, and right now I probably look like an idiot. I'm fine with that. All right, and I think that is one of the first things that, well, maybe the second thing, along as well as pardon me, not following consensus. Willing to look like a jackass is probably the second best thing that you could learn to do. And again, I don't dabble in options or calls or puts. I just buy and hold, because I know that I might be wrong in the short term. But if I've done my homework correctly, hopefully I've been doing my homework correctly, we'll find out in due time probably. I know that sooner or later I'll get my way, and I'm perfectly fine with waiting. And again, the good thing about bonds is that, you get paid to wait. All right, you might look like a jackass in the meantime, but you're still getting about 4%, depending on what you're holding. If you're holding TLT specifically, you're getting 3.8% right now. So I mean, it's not, again, there are people that are in a much worse position. Say you're a small cap investor, right? And you're looking at, companies that still don't drive a profit and that are scrambling for life, all right? Scrambling to survive at this point. So again, to summarize, I don't really do anything. I just buy and hold. Hopefully I bought at a level which was at a reasonable price. And hopefully I did my homework correctly before buying. Therefore, I know that it's just a matter of time, meaning that directionally I know where it's going. How will it get there? I have absolutely no idea. And I don't have, I don't expect to know how it will get there, meaning I don't know. I'm not going to trade it. I'm not going to trade the path. I'm going to trade the destination, all right? And as long as the price action allows me to maintain my original thesis, I will, all right? Had we blown out to 6%, all right, then at that point, probably go back to the drawing board at that point. But again, I just think, buy and hold is just the best strategy retail investors have at their disposal. Because again, I just to finish it off, I would go back to the drawing board, all right? Bear markets, right? Because bear markets are probably the worst thing to manage. What makes a bear market? Well, usually lows, lower highs, and lower lows, all right? Something like this. The problem with bear markets, as I made a video about this a while back, is that while this may be a bear market in its entirety, right here, a bear market is actually made up of bear market and a miniature bull market, right? And that is what makes it really, really tricky, all right? And again, because you have, these sell-offs, and then everybody feels a genius because they shorted it. Then everybody tries to chase the rallies, and everybody chases the lows, and you just get chopped up in between, all right? I'm not worried about this right here, the ups and downs. I'm worried about, are we here and we're going down here, basically. I don't care what happens in the meantime. I will care if, something fundamentally changes. Like, again, to answer the question, what would make me flip on TLT? Let's say that we go back to square one, meaning, we joked about tariffs, we're not going to have tariffs, and we're actually going to go back to stimulus checks. All right, COVID-style stimulus packages with direct funding to citizens, massive tax cuts. We're just going to stimulate the economy just for the heck of it. At that point, I'd call it quits, basically, because at that point you're just gonna, reignite basic inflation at that point. It would be hard to argue, while yes, current conditions might not look so rosy, that going forward, the direction is totally the opposite of what it used to be. All right. So that would definitely make me reconsider my position. But again, I made my first video back here. Not that back, right here, right? The week of February 10th. February 10th, everybody was quite sanguine on growth, quite pessimistic on inflation. I still believe that to be the case. All right. Time will tell if I'm right. Time will tell if I've done my homework. And again, if I haven't done my homework, you'll probably hear me, be watching my videos raging and having to, reconsider everything. So again, hopefully that answers your question. I think the best thing to do is buy and hold. Try not to get chewed up by these moves in the short term. And eventually change your mind if things fundamentally change. All right. And definitely, in my opinion, try not to chase short-term movements, because, if you're really losing sleep because of, the long-term moves, you really want to be losing sleep watching a 15-minute chart. I'd rather not. I already have, I already have my own challenges sleeping at night because of, everything, kind of gets to your head. I'd much rather not watch the 15-minute chart. Hopefully this answers your question. And again, if you like this kind of content, consider leaving a like. And for everybody else, subscribing to the channel. And I'll see you next time. Bye.